Howdy, y'all. Welcome back. It's the Liberty Call for 12/7/2021. It is Tuesday. Hope everyone's having a fantastic day out there in the interwebs. It's another beautiful day here in Colorado. I can't really complain. A little chilly this morning, but just fantastic. Not a cloud in the sky. I'm sure that's making all the snow people upset because there's no snow on the ground, but I'm not complaining because I have a feeling we'll probably get pummeled in January or February. And then all the people bitching and moaning will be like, oh my God, why is there so much snow on the ground? So anyways, all right, pretty good day in the markets. Let's go ahead and jump in and take a look and see how the indexes did today. See, Dow Jones was up 1.4, the S&P up 2.07, NASDAQ up 303. Let's see. The VIX is down to 21.89. Let's go ahead and take a look at the chart on that. If you remember last Friday, I was talking about how the VIX had gone up quite a bit. We see that here on this chart, that it had climbed up around 30. God, videos pop up all the time. And I'd made some initial changes to portfolios, based on that. And then today I had to go back and redo everything because the volatility went away. So it's kind of a pain in the butt. So, but that is some good news that the volatility has subsided. I guess the folks out there who were worried about omicron have calmed down. So let's see what other indexes. Let's see, China was up. Let's see, Europe. I saw that here. Europe was up 3.36. Everything looks, tons of green all the way down this page. See, the only red, Budapest. The Shenzhen component was down slightly. So, but everything else is green. So that's definitely some good news. So, all righty. So looking at the economic news out there, we had some good news as far as our trade imbalance. I have an article I'm going to cover on that. Wall Street second session in a row with positive numbers. Let's not get too excited. It's only 2 days. All right. So that's about that there. All right. So I do have some I have 4 articles I want to breeze through today. It's kind of a light news day, not a whole lot going on the boob tube. So first article, finally some relief. Gasoline and natural gas prices are falling. Who wrote this? Matt Egan at CNN Business. It was published today. All right, let's dive in. Americans grappling with historic levels of inflation are finally getting some relief where they need it most. Previously booming energy prices. After a relentless rise, prices at the pump are heading south. The national average price for a gallon of gas fell to a 7-week low of $3.35 a gallon on Tuesday, according to AAA. The outlook for home heating costs this winter is also improving significantly. Natural gas futures been nearly cut in half. God, who wrote this sentence? Let me read this again. Natural gas futures been nearly cut in half over the past 2 months. Wow, I'm sure that guy went to college. Natural gas plunged by more than 11% on Monday, its worst day in nearly 3 years. Energy sticker shock has been one of the biggest drivers behind the 31-year high in inflation. Cooling energy prices, if they last, could take significant inflationary pressures off the U.S. economy and inspire confidence among bummed-out consumers. This is going to help consumers considerably. Robert Yager, director of energy futures at Mizuho Securities, said, referring to the plunge of natural gas futures. Prices at the pump started leveling out as rumors swirled that the Biden administration would intervene in energy markets. By the time President Joe Biden announced on November 23rd the biggest ever release from the Strategic Petroleum Reserve as part of the coordinated release with other countries, oil prices were about 10% below their peak. That's even though Biden's decision to tap the SPR is viewed as more of a Band-Aid than a long-term solution. Yeah, I think it was like 50 million barrels of oil, which I think was only about 2.5 days of oil consumption in the United States. So it wasn't going to make a huge dent in the price of things, but it may have helped, may not. It's too soon to really tell. Gas prices, which move with a lag, started to drift lower soon after. Yes, prices at the pump are still at high levels. Regular gas is now fetching $3.35 a gallon, up from $2.16 a year ago, but they have finally stopped going straight up. White House applauds lower prices. Natural gas collapse. Let's go here. Meanwhile, natural gas remained sharply higher on the year, but has cooled off considerably in recent weeks. In early October, as fears of a European-style shortage swirled, natural gas hit 6.47 per million British thermal units. That was the highest level since February of 2014, but that rally has completely reversed. Natural gas fell 11.5% on Monday, its worst day since January of 2019, to $3.66 per million BTUs. That's the lowest since July 15th. So, some good news here. I'll attach it if in the show notes if anyone wants to read this. All right. Next article, American productivity fell by largest amount since 1960. All right. A U.S. labor market. Let me start by saying who read this, or who wrote this, by Anakin Tappy, CNN Business, published today, the 7th. U.S. labor market productivity tanked in the third quarter. Paychecks grew and the number of hours worked jumped, but workers' output increased only at a moderate pace. Revisions to the data that were initially published a month ago show that productivity drop was even worse than feared, falling by 5.2% on a seasonally adjusted basis. That's the steepest decline in the quarterly rate since the second quarter of 1960, when productivity fell 6.1%. The initial read on the data had showed the worst drop since 1981. Unit labor costs, meanwhile, climbed at an annual rate of 9.6% in the third quarter, reflecting a 3% increase in hourly compensation and a 5.2% decrease in productivity. The rapid jobs recovery is leading to more hours worked, and the competition for workers is pushing up wages, but output isn't rising as quickly. Economists warn not to read too much into this data point. Not only was the third quarter plagued by supply chain issues that are still not fully resolved, it was also when Delta variant of the coronavirus threw a wrench into the recovery, causing cases to rise and economic activity to slow compared to the second quarter. But even with the steep decline in the third quarter, productivity for the year is still expected to increase, according to Mike England, chief economist at Action Economics, who expects a 1.7 increase in 2021, calling it a solid gain. So kind of mixed news there. All righty. And this goes back to what I mentioned earlier. U.S. trade deficit shrink in October as exports rebound. So finally, some good news coming out of the export market. So let's go ahead and breeze through this. The U.S. trade deficit narrowed. God damn it. Pardon my French. The U.S. trade deficit narrowed sharply in October, falling from a record high as exports surged. Government data showed on Tuesday. Commerce Department said that the gap between what the U.S. buys from other countries and what it sells to them plunged by 17.6% to $67.1 billion. That's a 14.31 billion drop from September, when the trade deficit hit a record high of 81.4 billion. So again, good news. It marked the first time since July that the trade deficit shrank. Exports soared 8.1% to $223.6 billion, the highest on record. As some congestion in ports and warehouses cleared, the increase was boosted by stronger output, outbound shipments of industrial supplies like crude oil. Imports, meanwhile, rose 0.9% to $290.7 billion, the highest monthly total on record, as Americans continue to buy more foreign goods like cars, cell phones, and industrial supplies. The overall trade deficit through October surged by $161.7 billion, a 29.7% increase compared to the year-ago period. The surge reflects pent-up consumer demand for goods after the coronavirus pandemic forced large swaths of the economy to shut down last year. Yeah, we know that. Exports increased $315.1 billion, or 17.9%, while imports increased $478 billion, or 20.7%. All right. The U.S. goods and services deficit with China hit $28.3 billion in October, down from $36.5 billion recorded in the previous month. Exports increased $2.8 billion to $13.8 billion last month, while imports decreased $400 million to $422 billion. Experts say that the COVID-19 cases continue to fall and supply chain disruptions begin to abate. The U.S. trade deficit should begin to improve, though it may remain elevated through the end of the year. Well, since we only have 3 weeks, that makes sense. All right. And then the last article talk about the Fed. It's titled, Fed Poses Bigger Risk to Stocks Than Omicron Variant, Morgan Stanley says. This was written by Megan Hinney at Fox Business. All right. Close. All right. The newest coronavirus variant may have fueled stock market volatility in recent days, but Morgan Stanley analysts are arguing that stock investors should be more concerned about the Federal Reserve and its newfound response to the on-fire economic data. In a note to clients, the strategist led by Michael Wilson said that they are not that concerned about Omicron as a market risk factor for equities, but warned of a possible headwind after Fed Chairman Jerome Powell last week suggested the central bank may accelerate its withdrawal of pandemic support for the U.S. economy. Tapering is tightening for the markets, and it will lead to lower valuations, like it always does at this stage of any recovery, the analyst note said. While testifying before the Senate Banking Committee last week, Powell suggested the Fed may speed up its plan to reduce its monthly purchases of bonds and mortgage-backed securities, triggering a 650-point drop in the Dow. At this point, the economy is very strong and inflationary pressures are high, Powell said on Tuesday. It is therefore appropriate, in my view, to consider wrapping up the taper of our asset purchases, which we actually announced at our November meeting, perhaps a few months sooner. The central bank has been purchasing $120 billion in bonds each month throughout most of the pandemic in order to keep credit cheap and stabilize the financial markets. I don't know if they've really done anything to help either one of those things, but other than inflate a bubble. In November, Fed officials announced plans to scale back the program by $15 billion a month, a timeline that would end by late June. Powell told lawmakers that it's appropriate for the Fed to consider speeding up the pace of tapering at its December meeting as consumers deal with a burst of inflation. So we'll see. I'm not personally worried about any cold going around. I think people should just get back to work. If you're someone who is, immunocompromised, you might want to take better care of yourself. But that's just me. Anyways, all righty. Well, let me see if there are any comments in the stream. I don't see any. So going to go ahead and wrap things up here. So like I said, kind of a light day, just a few articles of, kind of the good and bad. Gas is getting a little bit cheaper, which is a good thing. I just filled up my truck with some diesel and got 50 cents off with my Kroger points, which is always nice. And, labor's up, but, productivity's down. So again, it's kind of a mixed bag of news. The trade deficit's improving, but, some of the actions that the Fed has done over the last 2 years, we're going to have to, rip the Band-Aid off at some point and deal with that pain. So I personally would like to do it sooner than later, but it seems like most people in Washington would rather procrastinate and make the problem worse. But hey, no one asks me. I'm just a humble advisor here in the middle of nowhere, Colorado. So, all right. Well, I hope everyone has a fantastic rest of their day. I'll be back tomorrow with my next video. And if anyone needs anything from me, don't hesitate to email, call, send some smoke signals, and enjoy the rest of your day. Bye-bye. Oops.